Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. Just a quick update for members of the CTKS method service. In the past 12 hours, the S&P 500 and Ethereum were released. It's very important to know where smart money is buying or selling, and when we look at the S&P 500, which is marked up with the CTKS method since 1871, we can see its closing price is 44.55. But where is smart money buying and selling? Where is price going to be supported inside the market, and where will it encounter resistance? The answer to that question is that there's smart money support levels at around the 44.35 mark up to around that 44.39, and there's a smart money sell level at 44.93. This week, the FOMC meeting minutes come out, and on the 26th of July, we have the next FOMC meeting. The probability of a 25 basis point increase is currently 86.2%. As expected, this will push the DXY and yields up. And we can already see the DXY starting to crack through that just very short-term resistance. But where is smart money buying and selling? We can see that the DXY is currently 103.074. But where is the smart money sell level? There's one at 103.1097 and 103.1299. One thing that we always observe, price is always moving between a smart money buy area and a smart money sell area. If it can't make its way through a smart money sell area, it's coming back to the buy area. And we talk about negative air and positive air and cutovers. They're very important concepts to understand. The markets are continually moving in a wave as investors and traders seek greater and greater yields and returns. We note at the moment the S&P 500 is not really under any smart money resistance levels. That means it could move up sharply and catch a lot of people by surprise. We are seeing more mainstream adoption of crypto, and this is a really interesting thing. BlackRock CEO Larry Fink. Now, who is BlackRock? What is BlackRock? It's not a pet rock. It's the largest asset manager on the planet. And the CEO Larry Fink called Bitcoin an index of money laundering. And how long ago was that? Well, that's about 6 years ago. And what about right now? BlackRock is filing for a spot Bitcoin ETF with Coinbase as the crypto custodian. What does this mean? Traditional finance can't stop crypto anymore, so it's adopting it. It's an unfortunate thing in financial markets that the crowd, the herd, is usually wrong. Why is that? Because they tend to read news headlines and they don't look more deeply into how these large organizations work. When you look at BlackRock, BlackRock knows that Bitcoin is a limited resource and it's already got hundreds of billions of dollars worth of value. The crypto market itself is worth over $1 trillion. Therefore, what is the traditional banking sector doing? It formed the ETH exchange. What are they trading? They're trading Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Why these particular ones? Because they're not deemed as securities by the Securities Exchange Commission. We've seen Litecoin and Bitcoin Cash do incredibly well recently, and the smart money buy and sell levels for Litecoin and Bitcoin Cash are inside the monthly service, as of course are Bitcoin and Ethereum. We know no alt can escape Bitcoin's gravity, and when we look at Bitcoin, Bitcoin has been doing a slight retracement. What has happened to Ethereum during Bitcoin's retracement? Well, it's come down. What about BNB? It's come down as well. What about XRP? It came down. Now it's starting to over-accentuate the positives of that downturn. And what am I talking about? Positives of that downturn? How does that work? It's all about a thing called inversion. If we actually start to zoom in here, will notice that the curves are following Bitcoin's gravity. This is a thing that a lot of people don't understand. As Bitcoin moves, so too does the entire crypto market. But it doesn't kind of look like it, does it? If you zoom out, and maybe if we just go to a higher time frame, it looks like an inversion. Let's go up another time frame. Well, look, they're clearly separating, Ken. That's not following the gravity. Well, let's go and zoom in and see, is it following Bitcoin's gravity? Please let me know in the comments. This is why we say, and we have a rule inside the masterclass, Rule 45, no alt can escape Bitcoin's gravity. What way Bitcoin goes is the way the crypto market goes. It's very important to be open-minded about things, well, just in life in general. Having been in the financial markets for more than 30 years, a lot of people get a prefixed notion about how things work. And they say, this must always be the way because, hey, I read in a book or I read it somewhere or somebody said it. It's not necessarily the case. The financial markets cannot be constrained. They're their own wild animal. That's why it's very important to be open-minded. That is, if you want to make profit and get synchronized in with the market. Let's have a look at ADA. As Bitcoin has been retracing, ADA is retracing also. What about Doge? Doge is a really fascinating thing. Doge tends to turn around before Bitcoin does. It tends to get really early on the party. I just want to point that out. And if you've seen any other relationships between Bitcoin and other cryptos, please let me know in the comments. We are a global family that learns together. A lot of times when things don't go a person's way, the most natural thing that you can do is to get ugly and blame and to get angry. However, that's a huge problem because we close off learning. A closed mind is like a cup that is full of water. If you keep on pouring new knowledge, which is kind of the water, into that cup, it will just overflow. It's never going to be absorbed, never going to be contained. What is the consequence of that? If you're in financial markets and you're not learning, you are making losses, guaranteed. When we go to school, when we learn at university, we're told that we need to be right. And when we go to a job, we need to be right. After all, if you're wrong, there's serious repercussions. But inside the financial markets, when you're wrong, you need to learn. You don't need to defend, you must learn. Because price is always moving in a wave. It's always going in an uptrend. It's always going down and neutral, then up, down, neutral, then up. It's very important to understand the nature of price. There are 4 zones that all investors and traders progress through to become consistently profitable and attain positive excellence and real wealth. Real wealth, it gives life meaning. When people enter, they enter the panic zone. And after a bit of time, and it takes a lot of courage to get out of there, they enter the blame zone. And you can see that when people, and a lot of people are in the blame zone, because they're addicted to certainty, they are terrified of getting into a position that may move against them. In Zone 3, we get into positions that move against us. In yesterday's video, I shared a trade. That trade was going and scaling in to a particular crypto that was amongst the greatest losers. Why was that? I wanted to get on the right side of the percentage. In Zone 3, we understand the percentages. It's very, very important to do that. And it's also important to have a lot of rules as to how you look at the market. When you see people venting or blaming or acting the victim, that is Zone 2 behavior. Well, what's wrong with Zone 2 behavior? You might know many people that make a profession out of that, playing the victim. Well, the unfortunate thing is with financial markets, the markets don't care about those things. They don't care about any specific person. They'll never know you. They'll never know your story. That's why Rule 603 is very important. Synchronization profits. If you're in synchronization with the market, you will make profits. If you are desynchronized, you will pay through losses. And of course, when you make a loss, it's important to learn. Please be kind to yourself when you do this. Everybody inside financial markets who's been there for any period of time has made losses, sometimes mind-numbing losses. That's what breaks you out of Zone 2 into Zone 3. Embracing the lesson of the loss, or the losson, is very, very, very important. Please don't stay inside Zone 2. You'll lead a very, very traumatic life. Of course, it's everybody's choice. If people want to stay there, there's no problem with that. But if you have a choice and awareness, you really want to get out of there. How do you leave Zone 2? It's all about synchronization, understanding the market is always perpetually moving in a wave. And what are those waves moving between? They're moving between structure. For example, when we look at total crypto market cap, where is total crypto market cap actually moving between? Where is its structure? It's here. What you can see is there's a lot of smart money support below the current market capitalization of the entire crypto market, which is currently 1.166 trillion. There's smart money support at 1.16 trillion, and a lot more and a lot heavier smart money support at around that 1.153 trillion up to 1.55 trillion. How do you use this and what does it mean? Even if the price keeps on coming down of all the individual alts and Bitcoin and Ethereum and everything, we would expect a technical bounce around this area. We've seen that we've got above it, and notice how price was constrained in this particular area. It takes time to get above. We didn't get above this smart money resistance level at 1.189 trillion. Why didn't we get above it? There was just not enough power from the buyers to get above. If we're not getting above, where are we going? We're going down to the next smart money buy area. And if we get positive air, we'll form a series of higher lows and make our way back up. That's why it's important to look for positive air and negative air. Each and every month, you will find objective dynamic market structure continuously changing. Make sure that when you mark up your charts with the CTKS method, you are auditing each and every time period. It's just like life. What you put in is what you get out. Where is smart money buying and selling when it comes to Bitcoin? Bitcoin is currently trading at 30,791. And what do we see? There's a smart money sell level up at 31,573. We saw negative air. Bitcoin just didn't have enough buying momentum, and sellers weren't in control enough. Now, why do I say that? Sellers and buyers weren't in control enough? That doesn't make sense, Ken. When you look at a depth chart, please let me know if the sellers are higher than the buyers, who is in control and where is the price going? This active learning will make the difference in your knowledge. It gets you to participate, and that's very, very important. What we see here is negative air. We can also see this 30,986 level, this one right here, was actually defended quite well. But when it broke down and it couldn't get above that level and go back and re-challenge the 31,573 level, where is it going? Towards 30,410. This level just here. And if you're a member of the CTKS Method service, this indicator and the video for this month has been released. It also comes with a 3-dimensional risk management overlay inside the video, which explains where Bitcoin could go in the next month. We know that Litecoin has been selected as a non-security by the institutional investors. This means it can expect a lot of inflow. And it's already seen a very good appreciation in price, and the Litecoin halving is coming up as well. But where is smart money buying or selling? We know from the Litecoin levels in the past month there was a lot of support underneath price. That has actually changed around quite dramatically. You can see that the resistance is now above price. Litecoin has been released into the CTKS Method service. Litecoin is currently trading at 105.190. We can see that there's an area of smart money support at 103.574, also at 104.896. Why do we look at these things? Why don't we just have one line for support or resistance? Because when price sells down, you need to know where the safety nets are, because they'll tend to hold price, and where the ceilings are, they'll tend to push price down. If a floor doesn't hold, it's going down to the next floor. If that floor holds, it's going up to the next ceiling. A lot of people are desynchronized from the market because they don't know where the floors and the ceilings are. Objective dynamic market structure is always changing. A lot of people think that they can just draw a particular line and that will just hold throughout time. That is not the truth. That's not how financial markets work. It takes many decades inside financial markets to understand this. I have a very deep knowledge of financial markets. In fact, I wrote a book, Intangible Finance Standards, Advances in Fundamental Analysis and Technical Analysis, back in 2005. This particular book asserts that intangibles create financial performance. What are intangibles? They're hard and they're soft. People understand hard intangibles like IP, trademarks, and patents. But the soft ones are a little bit more tricky and they can't financially value them. I actually created new branches of mathematics to financially value soft intangibles. What are soft intangibles? They're knowledge, collaboration, process, and staff engagement. And the purpose of these kind of books is to actually help people to create a calculation as to how changes in knowledge can impact share price and market value. I also wrote the book Intangible Management, Tools for Solving the Accounting and Management Crisis. This was written in 2001. This is all about the financial valuation of intangibles, especially soft intangibles. This was published through Academic Press and Elsevier Science, one of the world's leading academic publishers. As an inventor, I have a very different way of looking at financial markets. When you see inversions, such as what we see in XRP, it's not really inversion, it's just an over-accentuation of positive gravitational pressure from Bitcoin, as I showed earlier. But we know no alt can escape Bitcoin's gravity, so we must pay a great deal of attention to what Bitcoin is doing. When I was at school, I did physics, chemistry, pure and applied maths, and then I changed to a finance degree. One of the things that I found in finance, there wasn't a lot of scientific structure, so I wanted to bring that scientific structure to the world of finance. When I invented the CTKS method, it was because so many times it's hard to see what the structure is inside a particular chart. For example, what is smart money doing with Ethereum right now? Well, let's turn on the indicator from the monthly service to figure it out. We can see that Ethereum is currently trading at 1939. This is a reason that we need to know where the safety nets are inside market structure. If we don't know where the ceilings are, if we don't know where the floors are, if we don't know where the safety nets are, we'll desynchronize from the market. And if we desynchronize, it's incredibly expensive. As a former lecturer in first and second year statistics, one thing that you really need to understand is how to interpret a chart. I raised those books before because I understand fundamental analysis very well. I also understand technical analysis well. And of course, the representation or misrepresentation of charts. The CTKS method is all about objective dynamic market structure, or ODMS. That ODMS always changes month on month. It's always changing. People think it's constant. That's a huge mistake. It is not constant. We can see underneath Ethereum structure, and we're looking at structure right now, we can see smart money will lean in and support price. It will create a safety net around that 1933 to 1934 mark. And that's exactly what it did. You can see the price lost this 1951 mark and got caught with these safety nets. That's why we need to know where they are. And you can learn and apply the CTKS method yourself to mark up your own charts. All you need to do is to go to ctksmethod.org, or you can go to the masterclass. The links are in the description, but you can learn it once and apply it for a lifetime. It makes a huge difference. Can you imagine if you had this? You're just looking at the chart without understanding the structure. What would you do then? Well, you just do recent indicative price and create a story around where structure was without ever knowing where structure actually is. That is a very costly thing to do. This video is episode 944 of the Community series. That's a lot of videos. Inside the masterclass, there are hundreds of videos designed to transfer my more than 30 years of knowledge and inventive experience inside financial markets directly to you. And I did that for a very, very specific reason. My focus and Kate's focus is the same. We want you to be in control of your financial destiny. How do you be in control? You need to know the rules. Sometimes we don't like the rules that we learn, but what can we do about it? They're just the rules. We need to at least understand that they're there. Let's have a look at Bitcoin Cash. Where is the internal market structure inside Bitcoin Cash? When we pop on the indicator, what do we see? One thing that we saw with this smart money resistance, just imagine if price was just here, just nothing to the right of it. So price is just here. We can see that there was a ceiling up there at that 289.46 level. What happened? It couldn't get above that particular level. Then what did we notice with this floor at 285? That floor got instantly violated. That showed weakness. It showed that we were in all likelihood heading down to the next floor, which was at 274. What is happening here? You can see that price is always respecting these structural lines. I call them Stanfield levels or SLs. When you know where the SLs are, not stop losses, Stanfield levels, when you know where those SLs are, it's just incredible. It's such a boost to confidence and to self-esteem as well, because you know what the structure is inside the market. Most people are always guessing at where structure could be. We don't guess, we know. We're scientists. I would strongly urge you to learn the CTKS method, and you can do that through the links in the description. Because you learn it once, you apply it for a lifetime. So many people put their hard-earned money into the markets just hoping and praying certain things will happen. Don't hope or pray. Don't guess. No, it's much, much better. One very big difference between the retail mindset and the professional mindset is that professionals know the market pulse. They know how the charts interrelate and intercorrelate. All financial markets depend on each other. That's why we need to look far and wide. We need to understand the CTKS structure, the objective dynamic market structure of specific charts, and how they relate to each other as well. For example, if the DXY is going up, what's happening to the S&P 500? What's happening to Bitcoin? And you know what's happening to Bitcoin gravitationally will play out on your beloved alts. You may get inversion, but as you saw with XRP, that may not be the inversion that you actually think it is. Always have your three-dimensional risk management. This will synchronize you just by default. Please, if you can do anything, it's to remain calm and balanced. As soon as blame erupts, and this is a retail trait, when blame erupts, people get emotional, they get angry, they look outside themselves, trying to hold other people accountable for their own actions. In truth, nobody is a puppet to anybody else. We are all in control of our lives, even if sometimes it may not feel that way, but it is always that way. Being accountable is a professional mindset. Lashing out and being angry at others is a retail mindset. This is a Zone 1, Zone 2 list of behaviors. This is a Zone 3, Zone 4 list of behaviors. And the most important one is to be your own advisor. It's also very important to have the knowledge. If you don't have the knowledge of how to play the game, it doesn't matter what game you're in, your success will be severely limited. You may be successful through luck, but luck doesn't last. We can see that Bitcoin is currently down, but we understand total crypto market cap and the structure inside the market. So we could get a bounce soon, and we also understand the DXY is heading into smart money resistance. Turning to the greatest gainers in the past 24 hours, Aave, Zilliqa, Convex, Compound, Curve, TWT, and BIT. As part of my job lecturing first and second year statistics, the interpretation of charts is very, very important, as is the misrepresentation by the mainstream media of charts. And they do it all the time, but few people know that it occurs. I just want you to look at two things, Aave and Zilliqa. You can see over the last 24 hours, Aave is doing something. Over the last 24 hours, Zilliqa is doing something. Masterclass students, please use the EC method. You notice in the past 7 days, these charts are doing something. In the past 30 days, they're doing something as well. Which one of these particular charts do you think has more potential upside momentum, and why? Please let me know in the comments. I'll address it tomorrow. This is a probabilistic exercise, and it's quite important as well. Going through the greatest losers, top 100 past 24 hours, Flow, BSV, Woo, eCash, Pepe, The Graph, Optimism, Neo, and Stacks. Another really good thing to keep in mind, the Litecoin halving is 28 days away. Recently, there were a lot of headlines that NFT collections were getting hit. Now look at the one-day change. They're actually rallying. A couple of days ago, we saw the same thing in Binance NFT. They were all double-digit negative. What about now? Double-digit positive. In the news today, something that could be driving that, Lacoste turns fashion NFTs into digital cards for interactive Web3 experience. If interest in the NFT market flows through, that could be very interesting for the NFT-based projects. What are the top projects in the NFT space? ICP, Stacks, Sand, Ape, Tezos. Always remember that when you look at prices like this, you must know what you're doing and you must have a strategy. Also, your three-dimensional risk management is critically important. I'd like to extend a very special thank you to Oscar Bollinger, whose kind generosity for offering a CTKS partial masterclass scholarship. If you go across to cryptotechnicalanalysis.org, you'll find out all about the masterclass. It was created from a genuine desire to transfer knowledge to other people that I had spent tens of millions of dollars acquiring. The masterclass is a premium Rolls-Royce level masterclass on crypto technical analysis using the CTKS method, a method of TA invented specifically for crypto that accounts for exponential implosions and explosions in price and updates normal stock market and forex technical analysis. All of these lessons will literally take years and years off your knowledge curve. You won't have to go through so many problems, and you'll understand how to look at markets from a professional stance. And the LV series is always being updated as well. It's also really critical to watch the daily video. Inside the daily video, you get tricks and tips to keep you up to date. The masterclass is all about the transfer of knowledge so that you can be your own financial advisor. It's 100% practical. The concept in life is life's internal battle is the real battle. A lot of people feel like they're on a financial roller coaster when they're inside financial markets, and that's not too far from the truth. And why is it a roller coaster? We already know, because of Rule 4, price moves in waves. This is why it's a roller coaster. You just want to board that roller coaster, that financial roller coaster, at the right time. Like everything in life, what you put in is what you get out, and it does take a long time to learn the ropes and to learn the rules of the markets. Thank you again to Oscar Bollinger for your very kind generosity, and always remember Rule 446, all markets are intercorrelated and interdependent. If the DXY goes up, it's going to place pressure on Bitcoin. Pressure on Bitcoin will move the alts downwards. But we also know that the SPX, the S&P 500, is getting really close to support, as is total crypto market cap. The key to understand, structure overrides. As the markets are really volatile, you want to keep positive excellence as your focus. Positive excellence is really important because it's the opposite of negative excellence. Negative excellence is always driven by blame, shame, and guilt. Negative excellence exists in a scarcity mindset, a win or lose mindset. Positive excellence exists in an abundance mindset. That's the one you want. You want to be positive. It's very hard to be successful being pessimistic. And thank you to John for your quote. In zones 1 and 2, negative excellence is the reigning power. In zones 3 and 4, positive excellence is the reigning power. It's always a choice to choose to pick between the two of them. The key to a beautiful life is positive excellence. I'd just like to say how much gratitude and appreciation Kate and I have for you watching. We love reading the comments each and every day. There's so much wisdom that's shared there and so many great points. Thank you so much, everyone. We know that better habits create a better life, and at any time we can change our life for the better. That's why we have the CTKS Creed, which are daily positive affirmations for abundance, financial success, and happiness. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.